I'm going to call this meeting to order. That's okay. As the chair, it's still, now I'm in person doing this. Virtually, I got it down, but the in-person thing is a little intimidating. So it is 2:30 and I'd like to call to order this November 30th, 2022 meeting of the Audit Committee. Information about this meeting is posted on our county's website under the Audit Committee homepage for reference. And those committee members who are present today is Board of Supervisors Jim Andrews, School Board Rep Ellen Osborne, County Executive Jeff Richardson, myself, the Chief Financial Officer as Chair, Nelsie Birch, and the Superintendent Designee Rajlan Schmidt. Absent for the moment is Ned Galloway, so we will make sure when he comes in, the other Board of Supervisor representative will be appropriately announced in the minutes or what have you. So other attendees I do want to introduce Jacob Sumner. Many of you have probably seen or worked with Jacob. He's the Assistant CFO for Policy and Partnerships. Jacob has had to take on the role of helping us with our audit. We've had an unfortunate absence by our Assistant CFO for Operations who would normally do this audit. She's been out for some time. So Jacob has stepped in and he has done this before. He's the former Director of Finance at Hanover. So that he is very well equipped to do this work. So thank you, Jacob, for that. And he will be leading a lot of the discussion today. When our controller left in April, we hired Ben and his team at Citron Cooperman, Ben Carlin, I forgot your last name for a moment, to help us with the audit process. We knew that we would not be able to absorb that work without having a layer of knowledge and abilities to kind of corral us. And so Ben has been working since this spring, trying to help us get our stuff in order and be prepared for the audit. And then David Foley is going to walk us through our audit results. And that's really the reason for this afternoon is we've got some preliminary results that we want the audit committee to have in anticipation for the upcoming board meeting. I believe it's December 14th that will bring back the final audit for the public and the rest of the board. So with that, there's a couple more members. It's not on my sheet that I did want to recognize just so people know who's in the audience. Chase Chandler is our new accountant manager. So he runs the accounting shop. He is been with the county a couple years and how long have you been with the county now?
May of 21, so not quite 2 years.
Not quite 2 years, and has really proven himself in the accounting world. So he became account manager about a month ago, I think.
The 7th.
Yeah, the 7th, which is awesome. Andy Bowman, everybody knows Andy. He is our chief of the Office of Management and Budget, and does not have a huge role today, unless we call on him. It's Glenn. And then Kim Garner, who has been an amazing asset to us. She is the head of our grants unit, which is a unit that we created once we went through CARES and realized we are not structured to do this well. And we had some challenges getting our CFA done, which I think, we'll talk maybe a little bit about today, which is one of the reporting requirements we have for all grants is the CFA for all our federal and state grants. And so Kim and another member, Vicki Malamphy, have this unit that has really, really paid off to help us with all of our grant compliance, reporting, and also finding and getting grants where we can provide some value to departments. And this was something we hadn't done before. So today we're going to review the FY22 audit results. And we do have a few other agenda items. Typically, we only have that on the agenda. There's a few other things we wanted to bring in front of this committee because one of them is quite new, and it's the Board of Supervisors had asked for different reporting related to our volunteer fire companies. And we didn't really have a great vehicle to provide some analysis for what did we learn. And so Jacob is going to walk us through kind of where we are with that that project, what's to come, and get some feedback on that agreed upon procedures program. And then we have some update on some of our contractual relationships that we'll talk about later, that the committee has been interested in the past. I will update you on those as we get towards the end of the agenda, and then we will adjourn. So with that, are there any changes that any member would like to make to the agenda before we get started? Okay, great. Seeing none, I move that we approve the agenda. Do I have a second?
Second.
Great. Ellen, anybody opposed to that? No? On favor? Great. Yes, okay. It's probably not the way you're supposed to do it, but I'll get better at this over time. So the first item on the agenda is kind of a new one also, which I forgot to mention. David Buscemi had sent out, David is my right-hand person over there, and I forgot to acknowledge you. I'm very, very sorry. You were not sitting that way. David sent out the new policy for our consideration related to virtual meetings. And so we are in class 3, I believe. And so what this policy is suggesting, unfortunately, the wording is a little weird. It says all virtual meeting policy. That means the meeting itself is all virtual, not that this committee can always be virtual. And so we would recommend, or we are recommending, that we go to having one hybrid meeting a year. This committee meets twice a year. And so the spring meeting is more of getting us geared up for the audit. It's not the nuts and bolts of the audit. So my recommendation is we do that one virtually. And then the fall one is always in person. And so that's what this policy is suggesting, but open for ideas. If you all want to get together in person twice a year, we could also do that. But wanted to put that out there and see if there's a recommendation motion for adoption of this.
I move we adopt the policy for all virtual meetings of our Marshall County Audit Committee.
Great. All in favor, say aye.
Aye.
Any opposed? So, okay, great. Motion's moved. And now we are on to the FY22 audit results. And Mr. Foley,
Thank
did we start with you? No, we're not. We are starting with Mr. Sumner, and I'm sorry for that.
Okay.
Jacob.
Thank you, Nelson. I appreciate it. And I will introduce David here again in just a minute. I just want to give some introduction, give a little background of where we're at so far in the audit. From staff perspective, David is going to speak from the auditor perspective and presents more of the statements themselves and go over the required communication that he, as our auditor, is required to communicate with those in charge of governance, which is you all. So before your seats today, that you'll find a packet, small packets, and I know its size because typically our financial statements aren't this thin. They're typically about 180, 190 pages, which this is last year's, and this is representative really where we're at right now in preparing the financial statements and going through the audit. A lot of us work has gone into the prep thus far. But right now, there are still some key components to the financial statements that aren't ready yet. We will present the full report to the board of supervisors at the December 14th meeting. We'll have it ready and prepared to go on our website whenever it's ready to be presented as well. So some of the things that are missing that are not in these statements or that it's in the packet today are our transmittal letter, which is really an introduction to our audit and our financial statements. And it's really one of the more colorful documents or parts of the financial report, because it gives us an opportunity to really talk about certain economic conditions, talk about different things that are going on in the county, initiatives, things like that, as opposed to a lot of the hardcore numbers and footnotes and things like that. Some of the other things that are missing are the MD&A, that's management's discussion and analysis. That is really a comparison of last year's financial numbers, particularly compared to this year's. And that also allows us to have some more context and add some more flavor to those numbers as well. The largest section that is missing is our footnotes. And that's one of the more complex areas outside of the statements themselves, actual numbers, because there's a lot of meat in those explain the numbers and the words and talk about a lot of our accounting philosophies and our accounting practices, They talk about our major components of our statements, like our debts, our capital assets. They talk about pronouncements, governmental accounting pronouncements that we've implemented this year, and ones that are coming up in the future that may affect the financial statements. So they're really complicated and really complex, especially as you talk about these larger items like fixed assets and pension, pension and OPEB. Those are a lot of compliance driven type of notes. There is another section at the very end of the document that you'll see once it is complete, is the statistical section. That is a 10-year history of certain statistics throughout the county. Some of those are financial in nature, our revenues and expenditures, fund balance, but also goes to some things outside of just the raw numbers. It talks about like our population, school enrollment, our fees and things like that, our tax rates, assessed value, things like that. So it adds a really good history, even though our financial statements are really focused on the current year, or the one that we're just closing. The statistical table in the back will give a good context for history and historical perspective as well. So these are not the final. And as you thumb through these, you'll see that there are draft written throughout. Just wanted to relay and let you all know that more is coming. And we'll have the full final report on December 14th. I will say that this year we've had some challenges. I mean, to get to this point, we've had to overcome quite a few obstacles. Nelsie mentioned our staffing challenge. I think we're very fortunate to be able to promote and fill some positions from within. With Chase being our new accounting manager, we also had a vacancy in our payroll manager position. We were able to fill that within. And payroll is a key component, as 85% of our budget is personnel related. So that having a solid person in our payroll manager position is also critical. We also are without a controller right now as well. So a lot of these are key players in pulling together the year end and pulling together the financial statements and working with our auditors as we go through the audit. So we've overcome those, and we're getting there. But I just wanted us to recognize that it's been a challenge. I'm very thankful to have Ben and his staff to help us out, to really add some leadership, to add some perspective on timing and helping make sure that we're staying on track, and just give us some more resources, because we needed it. We need those extra resources to help really get us to this point. We also had a couple of large things that are happening. We implemented a new payroll system mid-year. And with all new systems, there is the effort and the work going into preparing and implementing the system, but there's also the post-implementation time where we're trying to stabilize an environment. We're trying to make sure we get reporting correct. We're trying to make sure that all things that are integrated within that system, whether if it integrates with another system, all those things work well. Sometimes they don't, and sometimes it takes a little bit for that stabilization period. So that happened mid-year as well. Seeing great results as we're getting through that, but I think you'll see that as one of the challenges that we had to overcome this year. The other thing that was not mentioned earlier that Ben and his staff has helped us out with is a new accounting pronouncement. So GASB is the Governmental Accounting Standards Board, and they create these accounting statements, which are really the rules that we have to live by as governmental accountants, how we present our financial statements. And one of the bigger ones that came out and was implemented for this year is GASB 87 regarding leases. And lease is a broad term in our general vernacular, but from a governmental accounting standpoint, it's a little bit more narrow. And there are some specific things that we have to look at to make sure that what we call a lease fits within those parameters. What makes that challenging is we had to go back and look through all of our documentation, look for these leases. So it took a concerted effort to actually go find these, because these weren't on the financial statements before. This is brand new. I'm very thankful that Ben and his folks have been able to help us out, help us review the documents, do the analysis, help prepare new footnotes that will be in the statements when they're finalized. So all that is some of the hurdles we've had to come over this year. I think one of the things that may have been discussed in previous years is fixed assets and grants. I think we've come a long way, particularly in the grants arena. You know, with Kim's leadership in the grants unit and with Vicky's support as our grants accountant, we've come a long way, and I think our grants reporting is becoming better. It's easier for us to maintain and manage the financial side of those grants, particularly as from the lens of an audit and a financial statement preparation perspective. So I want to give a shout out to them. Fixed assets is a work in process. You know, it takes a long time to turn a big ship, and we have a lot of fixed assets and a lot of capital projects. And so we're still working on that, and we're still working through that. And so I expect this time next year to give you another update of where we are with fixed assets and capital projects and things like that, because that also is a big portion of our budget where we spend a lot of our funds. So with that, before I turn over to David, I do want to give a shout out to the accounting team, you know, specifically named, you know, Chase Chandler, who's leading the accountants, Stacy Smith, Lisa Davis, Shelby Coleman, Tanya Canoodle, and then I also want to recognize Vicky Melanthe, who is our grants accountant. And they've all been very integral to this process, very dedicated staff, making sure that we are where we are today, and particularly on rounding the corner on these financial statements. So without further ado, I'm going to introduce David Foley. He is with Robinson Farmer Cox. They are our auditors, and I will let him go through his comments.
Thank you, Jacob. Good afternoon, everyone. Glad to be here with you all. As Jacob said, we've got through quite a bit of the audit, but there's still, you know, some pieces left out there that we still need to obtain and review. So while we've made a lot of progress, there still are those pieces out there. So what I've done for this meeting is kind of pulled together some select pieces of some of the items that are more complete. Also have drafts of the opinions and governance letter and a management letter that we issued this year. Again, these are they're not complete, they're in draft form. These are what the anticipated results are going to be once everything is wrapped up, completed, and pulled together. Again, as Jacob said, there with the pieces that we're missing, you know, the packet, you know, we're missing the footnotes that are still being worked on. You know, we've got, and we'll go through these in a little bit, we've got some select fund statement financials that we have in draft, we can go through. With some of the pieces that we're missing, we still have to get those pieces to get all the financials done and you know, pull together the entity-wide financial statements. And you know, we have received the CFA and the grant information, so we're finalizing our review over that. So still some work left to do, but I think everybody can, after a long hard road, I think everybody can see the light at the end of the tunnel on this one. But just like to go through some of these items that are pulled together. The first section is the draft opinions. So they're included in the county's annual report. There are 3 reports from us that communicate the results of the audit. And again, these are the draft opinions that we anticipate that these will be how they will look and the final results will be. So the first report we have here is our independent auditors report. And this report looks a little different this year in terms of formatting. The auditing standards, they had a change in really the format of the report. It used to be in this report that there was a lot of information towards the top, and then the opinion that you issued was kind of towards the bottom, and which generally the opinion is what most people are interested in. So I think this was a good change that they made to the reporting, and they kind of moved the opinion up towards the the top of the report, so it stands out, and that's really the first thing that you see. So in our independent auditors report, we do state that we did perform an audit of the county's financial statements. And we have anticipate issuing an unmodified opinion on the county's financial statements, which an unmodified opinion is the cleanest opinion in order to get on the set of financial statements. Basically, an unmodified opinion means that the county's financial statements have been prepared in accordance with generally accepted accounting principles. Down at the bottom of this page, the first page of the report, the opinion will note that the county did, as Jacob discussed, did have to implement a new accounting policy, GASB 87, which deals with the reporting of leases. Again, previously, operating leases didn't have to be reported in the financial statements as assets and corresponding liabilities. So I know the county's hard at work in pulling this stuff together so that the financial statements will have the effect of the standard reported in them. The flipping over a few pages is the second report from us. And this is our report over the county's internal control over financial reporting. So as part of the audit, we gain an understanding of the internal controls that the county has in place over its financial reporting, for the purposes of designing our test and test be able to issue an opinion on the financial statements. So this report, we do again anticipate this report will be clean as well. No significant deficiencies or material weaknesses were noted in the county's internal control over financial reporting. We do have, while this report is clean and no significant deficiencies and material weaknesses, we do have some recommendations that we had as part of the audit, which I'll be going over here in a little bit, that we issued in a draft management letter with some recommendations that we had as part of the audit. And then if we go 2 pages over is the third report from us, which is our report over the county and school board's compliance with its major federal grant programs. So as part of the audit, in addition to just looking at the financial statements, anytime a organization expends over $750,000 in federal grant expenditures, you have to undergo a single audit, which is basically a compliance audit over its federal grant programs. So for the major federal grant programs for the county and school board, as part of the audit, OMB provides a compliance supplement with a list of those various requirements that the county and school board have to comply with when it's carrying out and expending its federal grant programs. This report, again, we anticipate will be a clean report. We noted no material weaknesses or significant deficiencies in the county's compliance with its major federal grant programs. So again, we anticipate the 3 opinions that are included in the 3 reports that are included in the annual report to be clean. The next section is some drafts of some various financial statements. So the first one is Exhibit 3, which is the balance sheet for the county's governmental funds. And so the balance sheet reports the assets, liabilities, deferred inflows, and fund balance for the county's governmental funds. And then the statement also has columns for the various different governmental funds that the county has. So the first column is the general fund, which is the main operating fund of the county. Then we've got the federal and state grants fund, a fund for the CARES Act and ARPA funds, capital, a column for capital improvements. And then for some of the other non-major funds, there's a column to incorporate the rest of the governmental funds for the county, and then have a total total column. So we can see the total numbers for all the governmental funds. So total assets at the end of the fiscal year for the county, and the general fund ended the year with total assets of a little over 101 million. And then total assets for the governmental funds was 174 million. Then there's a section for liabilities and deferred inflows for the county, a little less than 6 million in liabilities for the general fund. Deferred inflows related to property taxes, 14.5 million. And then the bottom section of this report is the fund balance for the county's governmental funds. So total fund balance for the general fund ended the year around 80.6 million. And then total governmental fund balances 130.9 million. And then this statement also breaks down the fund balance into those various categories between non-spendable, restricted, committed, and then unassigned. You'll see there's some items that are highlighted. We'll need to get these the updated numbers for those. So the numbers that you're seeing here will change a little bit, but and this is the draft of those statements. The next financial statement is Exhibit 5. This is a statement of revenues, expenditures, and changes in fund balance for the governmental funds. Again, you have the same columns, and then the statement shows revenues, expenditures, other financing sources and uses, and then the change down at the bottom is a change in fund balance for the various governmental funds. So if we towards the bottom, that change in fund balance, the general funds fund balance had a decrease of 836,000. And then total fund balance for the governmental funds increased by 18.7 million. Largest increase in the county capital projects. The next couple set of exhibits are these are the statements for the non-major governmental funds. These are the smaller funds that we saw included in the column over in the front. Exhibit 31 is just the balance sheet for the non-major governmental funds. This reports by fund type, so the non-major special revenue funds, debt service, and then the stormwater control capital project fund. And the exhibit after that is in those same categories, the statement of revenues, expenditures, and changes in fund balance for those funds. And then the next set of exhibits are the detail of those non-major special revenue funds. So this is the balance sheet. So the various non-major special revenue funds. And then the following exhibit 34, that's the statement of revenues, expenditures, and changes in fund balance for those non-major special revenue funds. The next exhibit is the non-major debt service funds. There's two debt service funds, one for that accounts for the general county debt, and then one fund that accounts for the school debt service. The next exhibit 44, this starts the school board's exhibits. So exhibit 44 is the balance sheet for the school funds. Again, the school funds have separate columns for the various different funds. So we got the school operating fund, school food services, activities fund, and then the school capital projects. And again, this statement reports the assets, liabilities, and fund balance for the various school funds.
David, can you talk about the yellow column?
Yeah, so the activities fund, those numbers, in addition to the county and school board audit, there's also a separate audit done on the school activities funds. And so the results of that audit and the financials have to then be reported over on the schools, the school board's financials. This was something that was new last year with GASB 84. And that audit is close to completion. There's a couple items where I'm waiting for the schools to be able to finish that audit and pull those numbers into the report, but we anticipate that being completed shortly. And so once that's done, then we will have those numbers will be updated in this report. Exhibit 46, this is the statement of revenues, expenditures, and changes in fund balance for the school funds. And then down towards the bottom, you can see the net change in fund balance for the various school funds. And that's the last of the exhibits, financial statements exhibits. Again, there'll be plenty of other exhibits that will be included in the final report, but these are the ones that are now. They're also the funds that are more aligned with the way, you budget, you operate, those entity-wide funds, while they're required by GASB, they don't really align with, the way you budget and operate. Again, those will be pulled together, but these exhibits are kind of the main ones we typically would point out. The next section is a draft of our governance letter. So this letter, at the auditing standards required that we make certain communication to those charged with governance. So we do so in the form of this communication letter. Just like to briefly go through those. The first part is some qualitative aspects of accounting practices. Again, management is responsible for the selection and appropriate use of accounting policies. We do state in here that the county did adopt a new accounting standard, GASB 87. Accounting estimates are an integral part of the financial statements. So for example, management's estimate of useful lives over its capital assets, and that's used in determining depreciation expense. Two other significant estimates are related to the pension and OPEB liabilities that have to be reported. Those are estimates as well. Those are performed by actuaries who provide that information for the county's reporting. The next page, difficulties encountered in performing the audit. We had no significant difficulties in dealing with management as part of the audit, but it was very cooperative with us and trying to get information that we requested, as well as answering any questions that we may have as part of the audit. Corrected or uncorrected misstatements, certainly if any audit adjustments that we have will be provided to the county and so that they can post to their system and the system so that basically your financial system agrees with the audited financial statements. Disagreements with management. We had no disagreements with management over financial reporting. Again, if we had any, we'd have to disclose those to you all. Management representations, we will be requesting certain representations from management before we issue the final report. This is done via a signed representation letter. And then lastly, management's consultations with other independent accountants. As far as we're aware, management does not consult with other independent accountants in terms of second opinion shopping. But again, those are just the required communications we have to make to you all. The last section of the packet is a draft of the management letter that we had issued as part of the audit. So, as part of the audit, we identified certain items that didn't rise to the level of material weakness or significant deficiency, but things that we saw or thought we wanted to make recommendations and point out to help improve internal controls for the county. So the first item noted here is related to for the school board federal grant reimbursement request. And as Jacob had pointed out, a new payroll system had to be implemented this year. And as part of that, there were some issues with coding and allocation of payroll expenditures to the various grant general ledger accounts. And as a result, there was a period from January 1, 2022 through June 30th, where the school board was not able to submit reimbursement requests for various federal grant programs. So that caused a delay in receiving federal grant reimbursement for qualifying expenditures. So again, those were requested for that period in October of 2022. Certainly the best practices and what we would recommend is that these reimbursement requests are filed at least quarterly, but in cases where you meet a threshold and significant, you want to do file those on a monthly basis, just so that you get that reimbursement timely.
David, can we pause? Because I would really like, I know Jacob, you've done some preparation to look at, we just got these last night, but there's answers for all of them. But I want the committee to have a perspective of where we are with these and the improvements that we've made and what caused this issue. Because that post, you mentioned it in your introductory statement, when you focus so much on implementing a system and not enough on what happens after, stuff like this happens. And so we did not have the resources due to multiple reasons. I won't bore the committee on the reasons that the staffing resources collectively were a challenge, but among them was because we had to implement an HRIS system in order to handle our 1095 reporting that we've mentioned to the board. That's the ACA compliance that we had an issue with. Our vendor was not reliable. And so we needed to do an HRIS system that took away our consulting services. And then at the same time, we had some challenges with turnover in the payroll function. And so the kind of the complexity of that created some of this. But I do want a chance, if we can, just to talk a little bit. So Jacob, can you?
Yes. So this finding in particular, one of the things that we've already implemented, and one of the recommendations that we've taken up and put in practice is developing additional tools to make sure we have the right coding for our employee accounts, for their costing essentially. So we can post it to our general ledger so the way the schools have the resource or the ability to pull the right reports so they can submit for reimbursement on a timely basis. You know, this did take actually took some custom reporting. We had to get some of our consultant time to help build some additional, we'll call them allocations. You know, some of our payroll system, it's finite to a certain degree. You can't, there's certain limitations on how to cost certain things out. And so, but we have a way to get around that, to fix and really essentially fix that between the point of where we run payroll and finalize and pay our folks, and we actually record those entries to the general ledger, which is the basis for what we use to report or submit our reimbursements to federal government, to the state, wherever we have our reimbursement requests go to. That's a place that's been tested. That's been working well. It took us to October, you know, to get it there. And then once we got that in place, we're able to get the data into the system, so the schools are able to submit the requests. That's been working well.
Thank you.
Do you have any comments? I know you've been in it. Okay.
The next recommendation we had is related to, again, grant reimbursements, but in specifically with, Title 6B. You know, when we noted, during the year or during the audit that there had been no reimbursement request submitted during the fiscal year for Title 6B. So the only funds that came in for 6B were funds really related to FY21. And then those Title 6B grant reimbursements for FY22 weren't requested for the whole year until after year end. And, you know, again, you know, certainly Title 6B is a significant program. I think it's got, you know, $3 point some million in total for the year. Again, reimbursement requests, you know, at the minimum should be done quarterly, and that's when they're small. When you have, you know, significant amount of dollars that need to be reimbursed, you know, monthly is the goal and the recommendation.
And I'll say this is very similar to the one we just mentioned. A lot of it is personnel payroll related. So it's going forward. I fully expect this to be more timely and to have the data and information available for schools so that they can request reimbursement time.
Can I ask a question?
Yeah.
Sorry for being late. So what we're talking about though, is since the reimbursement's late, we're expending our own resources, not the grants resources. Shelling out the cash until
We're filling out the cash, expecting to be reimbursed though.
Well, we know
Do that anyway.
it was this, the time, it was a longer time to be reimbursed.
so cash is tight.
So the cash flow, it makes it more important that we monitor our cash flow in that situation. Because if we don't have the cash that we normally would expect at that time, we have to make different decisions on a cash flow perspective. So that's how that would affect that.
On our end, the cash flow is tightened because we are.
Yes, which means investment dollars are lower because we didn't have an ability to invest the cash that we had to expend on these grants from our own coffers.
Both of these cases, the school boards makes the request. For the reimbursement.
I believe so. Yes, I believe school staff, they have access to the systems where those grants are housed. But they pull the data out of the financial system, but then they submit that as part of the support for the request. But we worked, finance and budget works closely with school fiscal services because we're using the same system and we have to use the same data. So, you know, we're working together to make sure that they have the information that they need and then they will take that information for request reimbursement.
Will be set for quarterly or monthly, or is any?
I'll have to follow up on that one.
Trigger?
I honestly, I do need to follow up with fiscal services on that. I haven't heard, so I'm gonna say no news is good news to a certain degree. That there's been any delays, particularly for to have this magnitude, but that is something I will follow up.
What is so the question I had, and I'm sorry that I didn't think of this before. So, we have the new system in place in January that created this compounding effect of the reporting. But for the first part of the fiscal year, do we not seek reimbursement for the first part?
And we do, we do.
So for the most of the grants, yes, I mean, so Title I, ESSER, that money was being done, I mean, that reimbursement request was being done monthly. Then January came and then it came to a halt. So yes, typically that's done. Now for Title VI-B, that was a little different case. That even the first part of the year, there had been nothing, and that's why we kind of pointed out Title VI-B separately, because even prior to the implementation of the new payroll system, that wasn't.
I wrote it down.
Cool.
And on the big scale of the scheme of things, this doesn't, I'm trying to remember the language that I've heard so many times, material weakness or deficiency, it didn't rise to that.
Right.
But mainly because we were accounting for it inside, we were just tying up our cash flow. So it's not necessarily,
Yeah, I mean, it wasn't
it's not like we weren't auditing or accounting for it, we just didn't
Right.
Right,
tie it up.
yeah,
Certainly not a
Title
best
VI.
practice.
right, absolutely, yeah, absolutely.
Yeah.
Thank you.
Practice, and that's what this letter is kind of directed to.
And the best practice usually speaks to some other reason why you want to do it. Investment income in this case would be one of them.
Yeah.
Making
Cash
sure you can properly account for all the things and doing it quicker. It's easier to do it when you do it more timely from a staff resource perspective. So there's always reason for the best practice, which is why you want to do it. Because some of these other ones I'm really intrigued by, because we've not necessarily had this come to us to say, we need to do things differently here, because there's a different consequence for not doing it. And so that's why I'm very excited that this is the first management letter I've received. David knows this. We've talked about it since I took the helm here, because it's important. I want to know what they're seeing and how we can do better best practices. Because there's another reason why you do that best practice, which isn't a material weakness or deficiency, right? So that's really important for us to work that through.
The next item, we noted, there was some, a few departments, maybe one in particular, that, one of the things we did, do as part of the audit, we do a test of receipts and look to make sure that, things are being deposited, properly accounted for and timely. And our test noted that the receipts coming from community development were not remitted to Treasury so that they could be deposited in a timely manner. So for instance, we saw receipts in the amount of $4,283 that were collected in May of 21. And then 19,000, over 19,000 receipts that were collected in June of 21 through August of 21 didn't get to Treasury for deposit until October of 2021. Again, the longer money sits around before it can be deposited, the greater chance that things could happen to that. So certainly best practices, and anytime cash is received, that should be deposited at a minimum within 3 business days. And then I believe the county even has a policy on this. Once any department receives in excess of $250, it needs to get to Treasury, and so that it can be deposited that day. So it was towards the beginning of the year, there was a long delay in community development. Then we also, later on in the year, there was still an instance of delay. It was a little shorter this time, but $677 that was collected on March 31st didn't get brought in until April 11th. And then there was one receipt in our test that popped up, school board receipt for $100. It was received on June 3rd. That didn't get remitted till June 15th. So again, at a minimum, 3 business days, that money should be brought in so it can be deposited. And again, if it exceeds the 250 threshold, it should be brought in that day daily.
So this one, just to bring back the community development situation, much of the big dollar value was before Camino was put into place. And I think that part of the reason this has gotten better, I'm looking at my people here, is because Camino's in place and we've had much better processing and tracking of the activity on the community development side. Camino is the building, I don't know what they call it, it's the, when you get a building permit, it's the system that you, yes, it's the new front end software. They still don't have a back end, which is what the community development system will give them, but it's that front end, and they didn't have a front end before. But we've been spending a lot of time, I know Chase, you've been involved, and Jen Lynn's been involved in revenue administration, trying to shore this up. Is there anything else that we need to?
No, that's what I was gonna say. There's
Okay.
been some concerted efforts, particularly with revenue administration, where they do the proceeding of all the revenues that are coming into the county between community development and revenue administration to have that tighter connection for those.
We should get better at that. Thank you.
All right, so let me ask this question, just so I understand. You take a fee. It gets accepted, the receipts handed out to whoever gave us that fee, and then it just set before it went to treasury. Is this time frame any part of this related to work from home? And I mean, we wouldn't have had, this time period, we were still doing a lot of staff not in the office, so I can certainly tell you if I receive cash, and then if I'm not there to deposit it for 3 days, then it's gonna be.
So yeah, Ned, I think there was actually there's some personnel issues related to this in particular. I can't speak more to that. That's what really made these go high. And it was before Camino, so there was no tracking system. And I think there was some situations where it literally sat in a stack in a drawer without the proper accounting.
And whoever put it there was nobody to know it was there.
Yes, and there was a major effort to go through all of that last fall, which is why you saw a large deposit in October timeframe. But that should not happen again, because we can actually see and there's a better tracking mechanism on the front end.
Yeah, so you
Yeah.
know that somebody took it in, not just the person that took it, somebody
Correct.
else did.
Somebody else knows. That's exactly right.
Oversight.
That's exactly right.
The next recommendation we had was related to the vendor master file. We received from the county the vendor master file that we use for several purposes. One, we wanted to match up, payments to if they were on the vendor master file. But the file that we were provided was had the list quality and data quality and naming structure was just not a very clean, was not a clean file. Vendors with multiple IDs, temporary IDs, inconsistent naming structure. There was some vendors with missing tax identification numbers. And so, really our recommendation is that, the vendor master file should be certainly reviewed, and updated and kept clean so that we've got a clean vendor master file.
And from a staff perspective, that is best practice to maintain a current vendor master file. So that means that it has to be worked through regularly. And that means looking through all our vendors, and especially those that we may have not have business with over several years. We have some data cleanup that we need to do. I know going into the new CSM, to our new financial system, this will be a big precursor to that as well. So that's something that is definitely on the horizon that we see coming. But this from a day-to-day standpoint or from an annual standpoint, quarterly standpoint, something we need to look at a little more regularly. And a lot of this revolves around clean data, but it's also it's internal control too. So we're going to make sure that it's we do a better job.
Here's this. These first two items sound like something specific to changes we made. Sounds like there were some personnel things relative to that time. So I don't ever recall this type of thing coming up. Is this a new rock you looked under this year?
I mean, so, certainly you change, based on inquiries of staff, you will alter your, auditing procedures. So, that was one thing we thought, based on inquiries of staff that we would.
So you didn't necessarily look at this
it.
last year.
Right.
I mean, this is one that's like, oh, well, after 12 years of being on different audit committees, I would have thought a vendor list would have popped up before. Doesn't seem like the other ones are time specific.
Right.
Due to certain circumstances. So this isn't necessary. So based on the work you did, so I understand what you just said, this was one, well, let's take a peek at this and this is what you found.
Right.
Thank you.
Is the list, I mean, when people get on the list in the sense that I can understand if somebody's been debarred, you have to find that out, purge them, but to have them on the list and then no ID or other information suggests they were added, but
Sure.
completely or.
So some of it is really the vendor management process as well. Our system is clunky from a perspective of managing vendors that have multiple addresses. We'll definitely have, so a lot of times for Dominion Power, paying our power bills, there are multiple mailing addresses where we'll send those funds. And our system is an older system that does not handle multiple addresses great. So that's one of the reasons that's there. It still needs to be reviewed and looked at and worked on. Some of the temporary vendors are for items such as juror payments. That's not going to be like a regular payment where we're procuring a service or a good, but that is a payment we need to make. We need to have them as a vendor in our file. So some temporary vendors are expected and are going to be okay. That's still part of the, we need to make sure that those are purged appropriately and those are handled and entered correctly and appropriately. So.
The next item is related to VRS. So monthly VRS information is entered into the VNAB and then uploaded, and then the county has to submit payment to VRS. And so as the county is processing that payment to VRS, really the amount the VNAB system spits out an amount that says that you should pay. And then that amount should also be then reconciled to what the payroll system in the general ledger says. So one, it helps to ensure that the accuracy of the information that's entered into VNAB. And we were not able to see where the county was performing that reconciliation prior to submitting the snapshot.
So that is policy change. No, I don't say policy change, but that is a post payroll process that has been improved. Working through the VNAB system and reconciling that snapshot with what was withheld within payroll. Doing that for all of our employees for payroll, it's a challenge, and with the new payroll system, getting data out, the reports out. That was a learning curve for us, particularly this year, as we're trying to make sure that what we withheld from employee paychecks regarding their pension and their contributions to the retirement matched what was expected from the Virginia retirement system and what was paid. That has been complete. We did a thorough we'll call it internal audit, internal review, and we made sure that all employee accounts were up to date. Employee deductions, withholdings, however you want to label it, but were accurate. We did have to make some adjustments. We did have to go back and we could communicate with employees were those folks that we needed to deduct some additional retirement to make sure that they were caught up. In some instances, there were some adjustments in the other way. that we had withheld a little bit too much. So we have completed that process. We've gone through that, and that is caught up. You know, that we took that as a big chunk of work, but that is caught up, and that was caught up at the end of October, and now that is part of our monthly post payroll reconciliation process. And so that is a standard practice now for us.
And the last item is related to payroll. We noted as we're doing some payroll testing, there was an instance where a person received a net zero paycheck because the withholdings that the system took out were incorrect and left them with a $0 paycheck. So, and I know in talking with, you know, the folks in payroll, you know, certainly we recommend that, you know, there's edit checks done, high-low checks done to, you know, make sure that, you know, things don't, you don't have the irregularities or things don't, you know, look correct.
And that is part of our standard payroll process that we do every 2 weeks when we pay our employees. Right before we hit the button to approve it, to submit it, we're looking at our top 20 earners. We're looking for those that have you know, high hours, you know, particularly there's overtime. We're also looking at folks that have zero earnings. To see, you know, is there a reason for that? Would they want to live without pay? Is there, you know, make sure that is accurate. One of the things that greatly helps in that effort is bringing on the HRIS system, ADP. So particularly during this time between January and June, because we're talking about this fiscal year, payroll was just an ADP, and so the benefits side was still in GP, and our financial, it was our core financial systems, and so there was some separation there, and trying to get the data to work was a challenge. Now having HRIS and payroll both in ADP, it's a much smoother transition of data from the, we'll call it the human personnel profile side. That's your base pay, your position, your benefits, over to what actually is being paid, from your salary to your hours to your deductions and withholding. So that's made that process much smoother.
Awesome, thank you. Anything else? I know we're a little bit over time. It's going to take a few more minutes to go through our last agenda items, but I wanted to make sure there was no other questions from the committee members for our auditor. Good, okay, awesome. David, you can leave if you want, or you
Well,
can, yeah.
Usually,
Yeah.
there's a typo when you're representing
Okay.
all through it. You have
Okay.
county infallible models for the county.
Okay, got you. We'll make sure. And that's one thing. We have a quality control department that before we issue the final report, they go through it with a fine tooth comb. But thank you for pointing that out. We'll make sure that that's correct when it's in there.
Thanks, David.
Thank you.
Then you can also feel free to get on the road to the Bethesda. We really appreciate you coming and helping us. So the last couple items, Jacob, do you want to go through the AUPs?
Sure. So as you all may be aware, one of the things that we work very closely with our volunteer fire companies is we're a major funder for volunteer fire companies, and an integral part of our fire and emergency services umbrella that we provide to the county. And so we want to make sure we're doing our fiduciary duty with those volunteer fire companies. And one of the things that has historically been presented from the fire companies is their annual audit. One audit, kind of saw today, is only a snapshot. It can only go so deep into their financial well-being, to the organization, things like that. So we wanted to take it one step further to get a little more information. So we developed what's called an agreed upon procedures process, and that's terminology in the accounting and auditing world where a set of procedures is prescribed and given to an auditor to perform on whatever entity it is. And it's really a checklist. They go through and follow the procedures. And so we implemented that last year as part of trying to get some additional information, additional oversight, and really insight into the volunteer fire companies. And some of that is the procedures we asked their audit firms to do is, look at their budget to actuals, looked at their the revenues coming in. There, we look at their membership roster, so it wasn't just a financial related review. There's an operational aspect to it. We want to make sure that the members we have on our rolls match the membership that they have on their rolls, and then there's some certifications that are required that they're up to date. I will say all the so good news, no news is good news. So there's no news here. All the reports that came back were complete. All the volunteer fire companies were in compliance. They completed the report. The auditors gave final reports to us. And in my review, my analysis of all those results, there was nothing that stood out. Yeah, there were some things I would expect to see. You know, somebody's on a roster on one but not the other. There's some timing differences. But all in all, they were compliant. I will say that we are going to make some changes to that AUP for this next year. We received what we asked for. What we asked for and wasn't quite what we really wanted. So we need to, so from lessons learned from going through that process, we need to be a little more prescribed and be very precise on the procedures. For an example, if we ask the auditor to obtain a trial balance, well, they obtained a trial balance. And our intent was obtain and share with us, report to us a trial balance. Well, if it's not in the procedures, they're not going to go the extra step. It is purely black and white. It is this step for step. And so that's some of the enhancements we're making. That will be going out to the volunteer fire companies probably tomorrow. The other item, there's a new section this year. We've expanded fixed assets. So we fund apparatus for our volunteer fire companies. We want to make sure that apparatuses that we've helped fund them is still on the premise, that they're still using it. You know, it sounds like it should be there, you know, but we want to have some verification. That's what the third party auditors are doing for us. It's agreed upon procedures. So happy to answer any questions. I know we're short on time, so I was trying to be
That's
quick.
very good to hear that we're doing that. Those audits have been. The fact that they all came in is in and of itself a win. So we're- on the HR side, you said certifications, are we doing things like driver's licenses, proper licenses for, I mean, does it get to that level?
If I recall, some of the certifications dealt with the ability to drive the apparatus. And this is outside my depth here.
And that can be brought back later. I'm just curious the level, because that's something where what they drive, are they proper to drive, et cetera, would be.
We do, and I think that's driven out of Dan Eggleston in the fire department's overview out of the operational side.
Check.
Yeah, I think you're right.
Yes.
It's real deep. Yep.
Yep.
And we have worked these AUPs, the fire chief, his deputy chiefs, his chief of staff, they are very much involved in this and have been the whole time. So this has been in connection with their operational review. This is kind of financial review, but we've been together on that.
Yeah.
Okay, the last thing is really an update on, I was very vague here on our contractual relationships. One of them is going out for a new external auditor. So we will be starting that process. Jacob has got the timeline and an update for that. So I will turn it over to you right now.
Yep. So at best practice, that's a theme for today, a sense best practice for auditors is to enter in a long-term contract, which is typically around 5 years. The reason for that is so your auditors get to know your environment, to know your internal control environment, that they understand the operations and the financials. However, it is important that to have fresh eyes. So industry and best practices is to at least go out for procurement every 5 years. And so we were at that time that we need to do procurement. It doesn't mean that our current auditors can't bid. It doesn't mean that they may very well may receive it. We don't know. It has to go through the procurement process. But that is the timeline for that is right around the corner. We've been working on developing the RFP for audit services that it will go out at the beginning of January. That will be out on the streets for about a month and a half, the most 2 months, so beginning of March. We look to have all the responses back and look to be under contract by April 1st. So at your spring meeting in May, we fully anticipate to introduce the auditors that are under contracts. And that also will give them time to prepare their preliminary field work, prepare their audit for the next year.
One of the things we've learned and that we want to build in-house is, the support we've had historically has been our external auditor really does a lot of the work that we should be doing in-house with our general accounting staff. We really have not had general accountants on staff. We've typically had a controller, accounting manager, and then a series of accounts payable and accounts receivable professionals. And so much of the reason we don't close monthly, we don't close and do the things we're supposed to do quarterly is because we've left it to our auditors to just do it for us at the end of the year. We cannot be in that space anymore. We are too sophisticated. We're too complicated of a government. And that's part of what we're building. The board has been very supportive of adding additional accountants, which we're in the process of recruiting for right now. These are going to be high-level general accountants who will work for Chase and getting that expertise in-house. And so while there will be an opportunity for our current auditor to bid, our expectations will be different, and this is not a low-cost bid. So it will not be structured that way because we really need to see different things. And so if they can rise to the occasion, that will be great. But I think it is time, and I know, Ned, you've been a very big supporter of this effort, that we're going there. And by the fiscal 23's audit, we'll have new requirements. I don't know if we'll have a new auditor, but we'll definitely have new requirements for the audit. The management letter should speak to you that this is the first one I've ever seen since I've been here. And there's so much more that I know of that they should catch. Yeah, that are basics, like the thing you asked about. I love that you asked about it. Wait, this vendor records. Yeah, it's been like this forever. So anyway, we wanted to give you all an update on that. And it's going to be a hard effort, and this is it's going to change some things about what we hear and see in the event we get a new auditor.
Yeah.
And before we get a new financial system, but I think that's a great time for us to know before we get the new financial system and do the implementation, we have a lot of great documentation about where we have some weaknesses, where we need to shore some things up that can really be helpful. The last one I wanted to mention is the board had supported, and we talked about it a little bit last year. The committee also endorsed it, which was a fraud, waste, and abuse hotline. So this is kind of phase one of an internal auditing function that we currently do not have in the county. We want to be, the AUP is, and part of the reason I wanted Jacob to come here and talk about that is that's really an effort to do a little bit of internal auditing. We're auditing the auditor's perspective of what's happening in a fire company. That's it. I didn't say that very well, but that's where we want to be. We want to do more of that. We want to be able to do that, with John and other things, really develop that muscle. And so one of the areas that we will certainly, it wasn't called out here, but another auditor might call it out, that you do not have a place for people to come anonymously and talk about any fraud, waste, or abuse that's happening. That's a normal thing that should be there. And so we have enlisted a company who does this work. We're doing it, it's totally anonymized, like multiple layers. There's no way that either the vendor or us could ever find out who is putting in this information. And that person who puts in the fraud accusation, if you will, has their way to get into the system to look at their account, but we will never know who that person is. So it's completely anonymous. It's used in Arlington, and I think Loudon is who we're piggybacking off of their contract. And so we plan to have this up in January. And this is for the public. So this is both internal. We want, employees and people who engage with the county to have access to this. But this is really, if people see things and they want us to know about it and to investigate something, we'll have some sort of public campaign that we haven't gotten there yet. But this is going to roll out in January as part of this effort of getting us to where we need to be with respect to kind of best practices. And this is one of them.
So will that be available for like school personnel too?
Yeah, so we are actually have a meeting next week, I think maybe, with Rosalind and Dan Redding. To talk about what does this look like for the schools? And what I shared was, this is really about the fiscal responsibility. And so that is why there is likely to be schools things that will come in here that will need to be investigated. And so that's where I would see it happening. You know, Rosalind and Dan or Claire will need to direct the resources to get it investigated so we can take action with whatever that might look like. But we're still working through that.
Does Mia or do we have a whistleblower policy? Because this sounds specific to fraud and abuse and that. But boy, that Richardson guy keeps coming to work drunk. Who's going to report that? You know,
You have to bring it up. I'm tired today on quite a bit since the last time you talked to me about that. We have a, and any of the staff can help me with this, if you will. We have worked on our harassment types of policies in the organization. And we've rewritten that in the last 12 to 18 months. We've done organization-wide training specific to a whistleblower. So the non-retaliation has steps and guidance. If you are reporting higher levels of management for inappropriate behavior. I don't know specifically if we have a whistleblowers policy. Nelsie,
I don't know.
Nelsie, Andy.
I think with us setting a chart, but I mean, I wouldn't be shocked if Mia doesn't bring it to you.
Yeah, it's with me and I have specific discussions about this. We're going through, in fact, in my inbox right now are a number of draft policies, local government draft policies to look at in that vein. And so I can follow up with much more detail. The non-retaliation stuff really has to do with reporting behavior to the HR department. That would be, you'd be in a supervisory subordinate situation and with steps to guarantee that there will not be reprisal of any kind or penalty for just what you're talking about.
I didn't mean to go on that tangent, just
Yeah.
that's essentially what it is.
Very much
It's
related.
related.
Yeah.
Yeah.
Very
Back to this in particular. Who monitors this?
So the company does, so the company that we're hiring, it's really inexpensive. I think it's only like $2,000 or $3,000 a year. Because it's all electronic, so it's on the computer. But they essentially, we've got to work through, that's one of the things we're working on is the workflows. What happens when somebody puts in an issue? Who does it go to? And that is one of the things I want to talk to Jeff about is where does this information need to go? And we haven't fully thought through that about where does it need to go? Who needs to know about it and be copied on it? So we're working through that. If you all have recommendations or suggestions of things, I welcome that.
I'm not sure what I'm hearing with, but it seems like the county attorney's office is an appropriate place to
Mhm.
copy on these.
Yeah,
As
Yep.
a check.
it's a very good point. Bringing Steve's group in. So the who on that group, that will be something we'll work through. So we'll make sure that's on there. It's a great call. I mean, we'll learn more as we go because we don't have it now. And so it's going to be really interesting to see, when we'll get our first anonymized inquiry and how it goes.
Yeah, be careful what you wish for.
Right.
Way more
I know.
nonsensical things.
Yeah, it's very true. I'll make
And
sure
now she's
to-
paying for all that alcohol. On the company card.
Mostly they're gonna be about overpaying the
Oh.
supervisor.
All the beats, right? All-
Sorry, Jeff, I didn't.
It's okay. If it were 5, I'd suggest we all go for a beer.
Yeah, that'll be happy. So anything else, anybody before we adjourn? Thank you very much, Jacob, for all your work and help.
I do hope, and I don't know, we're way over time. I do hope that the audit committee sees a trend of theme here. of this organization moving in a way, and size and complexity certainly matters. We are way too big of an organization from a financial standpoint, not to have an internal audit function. I mean, we just are. And there's components of that, but one of the things this committee did not ask, was how long our auditor has been our auditor. But it's been a significant period of time. And we are the largest client of this auditor, and that matters greatly. That means what they see here, they don't see anywhere else. And
he was 5 years ago, but it's been.
right. So we are moving, and it is significant heavy lifting to change auditors. It is significant heavy lifting. I did it just before I came here. And it's really hard work, but it's necessary. If it's necessary, it's necessary for the right reasons, if that happens. So I'm very excited about the direction that we're going, but it's not without a lot of hard work. And so, but this committee has been very helpful, but because we've had some of these discussions, you mentioned the hotline and stuff that came up last year, and we've been working toward that. So Nelsie, thank you. Jacob, thank you. Also, thank you for the relationship we have with the schools division too. It's they are also a very large organization. We want to stay in lockstep with them when it's appropriate, and want to help them in any way we can. So thank you.
Awesome. Great, good. Motion to adjourn? I moved. Okay, let's go. Okay, meeting is adjourned, 3:52. Thank you all.
I had it down before. I think so.
Yeah,
But I
I think when I updated this, when David had done it till 4, and I was like, oh, we don't need